Hello everybody, welcome to the afternoon here on ausbiz, and as usual we kick it off with the call. 10 stocks that you've suggested that we take a look at. I put them to an expert panel for adjudication. I chuck in a bonus stock of the day, a company that's been in the news. A panel today, Francesco De Stradis from ELD. Francesco, welcome.
Good, hey David, how are you doing?
Yeah, doing very well. And Michael Gable from Fairmont Equities is here in our Barangaroo studios. Michael, good to see you.
Thanks, David. Good to be back.
Good weekend and
Yep.
fighting fit and ready to. It's a big week actually of annual meetings and things like that, isn't it?
Yeah, keeping us on our toes.
Yeah, absolutely. Let's kick off with the stock of the day, one that I thought we'd take a look at, and it's in the agricultural space. Elders. Full year net profit and revenue marching higher, announced this morning, with expectations of excellent trading conditions to continue in the year ahead, saying it's well positioned for growth with supply chain constraints being managed with forward orders and risk diversification. Payout also getting a boost up to 22 cents a share. The stock comes up quite a bit on the show, but is often seen by experts as a bit risky and very cyclical. So do these results change the Elders story? It's been put to me that Elders is like an Australian agricultural ETF. That it has a bit of everything in agriculture. It's got its finance arm, it's got its property arm, it's got its grain hauling arm, it owns farms. So all of the Australian agricultural sector is sort of summed up in Elders. Francesco, what did you think of the result, and what's the view on the stock at the moment?
Yeah, it's interesting what you say there. I mean, Elders sort of clips the ticket on everything through the agricultural space, even trading farms and properties and things like that. So they're in the real estate business, mortgage business, but I think the key to it is the agricultural supplies and services. Look, I thought it was a great result, 22% higher. Conditions have been very good for the agricultural sector, particularly over on the East Coast. They're expecting that to continue into next year. Cattle prices and sheep prices, they're saying that they see those as remaining high. I'm no expert on the agricultural side of things, but this all stacks up for me on where it's trading at the moment. I mean, the share price has pretty much gone sideways for the last 12 months. If they can deliver another, even 10% growth next year on top of the 22% this year, I think it's trading relatively, it's presenting good value, trading around 12 times at the moment, and probably, if it delivers 10%, you're looking at 10 to 11 times. So it doesn't look too bad. They're only paying out about 50% or 42% of their earnings, which is fine, which means they're reinvesting in the business. But that delivers a 3.5% fully franked dividend yield, which to me I think is attractive. We don't have coverage on it, but I do like the looks of it. I think it's probably worth a position in people's portfolio.
Okay.
The only thing is obviously weather patterns are going to be potentially concerned. We're seeing a bit of flooding in New South Wales at the moment. Not sure how that will, whether that will be a negative or neutral impact on the business.
Yeah, it's interesting, Michael, because in a business like this, to make a prediction into the year ahead is pretty hard. You're really in the lap of the gods, aren't you? But a great result. Sort of, we're obviously over the drought at the moment, and Elders is benefiting.
Yeah, definitely. I mean, you mentioned before these stocks are very cyclical and risky, but that risk goes both ways, of course. So you don't want to be holding Elders when you have the drought and everything's going against you. But when you're in the sweet spot in terms of weather and livestock prices, etc., then that's the time to be there, and that's what we're seeing now with this business. So their sales are up, earnings are up. Sure, their costs were up, but it looks like the result was a bit better than what everyone was expecting. And it's hard to predict the weather, but it does seem like we'll have a fairly wet summer, and that would be beneficial, providing it doesn't flood for Elders. So yeah, look, it is in a sweet spot at the moment. As we speak, the shares are up about 1%, so the market seems to like it. I'd be happy to hold Elders here. Yeah, the share price hasn't made much progress in the last year, but when I look at the way it's trading, it does seem like it's been unable to get through that sort of 1250 to 1270 region. So if I was to put my trader's hat on, I'd say, well, if this result is pretty good, this might be the catalyst for it to actually clear that resistance level. Yeah, right. and then it can have a bit of a run. So I'd be happy to hold it here, and if it does clear that hurdle, then I'd be happy to add to it.
To buy at the same time. Francesco, with cyclical stocks like this, do you buy them now when things are going well, or just sort of gird your loins and when everyone hates elders or there's droughts and whatever, that's the time to get set in them?
Well, that's a good point you raise, because ultimately, when there is, flood, drought, fire, even, these stocks get severely negatively impacted. So, at the peak of a drought, maybe when you start to put some of this sort of stuff in your portfolio. We do get questions all the time where clients want to get some exposure to agriculture. And there's, surprisingly in the Australian market, there's not a great deal of choice. But look, while they're performing well, I think there probably will be a bit of momentum on the back of this year. I wouldn't expect another 22% next year. Farmers would like to have great years every year, but that's just not the way things work. But I would expect that there is a bit of follow-on from that because of weather patterns. Not that I'm any weather expert, but you would expect that.
Yep. All right.